On Tuesday, Federal Reserve Chair Jerome Powell reported that rates are likely to remain elevated for longer due to sticky inflation. That certainly impacts the housing market as rates remain near their highest levels in decades. Well, I sat down with Zillow's Chief Financial Officer, Jeremy Hoffman, who explained how this report could impact the company's financials. Take a look.
Yeah, there's no question housing has been challenged over the last couple of years, and that's been really a function of higher interest rates. So affordability is a challenge for folks. At the same time, we've been able to execute quite well through it. So we've outperformed the real estate market 7 straight quarters at this point, pretty meaningfully. So we look at the opportunity in front of us as one that is compelling regardless of the rate environment and one that we'll execute through.
Is consumer activity changing on your platform in response to these still elevated rates?
Yeah, I wouldn't say it's necessarily changing. I would just say it's more muted than anything else. And that's just a result of when folks see a spike in interest rates, they get a little bit nervous. And as a result of that, a little bit more cautious around actually buying a home.
I know your company recently reported earnings. You did see decent growth in the residential and the rental segments. Do you anticipate that growth to continue?
Yeah, so we have in Q1, we ended up growing revenue 13% year over year. And that was in a challenged housing market. You know, our residential business was up 9%. That's where we help people buy and sell homes. Rentals was up over 30%. And our mortgage business, where we originate loans via Zillow Home Loans, that was up 130%. So when we look at our outperformance versus the category, we feel quite good. And we know over time, housing is going to be a growth industry. We just happen to be near the bottom of the cycle at this point.
What is your take on affordability when it comes to owning versus renting in this market right now?
It's hard. There's no question about it. I think when rates are at this level, folks are trying to figure out what can they afford, and that's what we're trying to help people understand. So our job is to have as many listings for sale as possible, and then as many rentals listings as possible, and really help consumers understand what makes sense for them in this particular period of time. We released a feature called Buyability this week, which basically allows consumers to come onto our site, input income and credit score information, and then they have the ability to let that travel with them through their search experience. So these folks will now understand personally, on a personalized basis, how much can they afford, where does it fit, where does a home price fit within that affordability, and then they also will understand if they can be pre-approved for a mortgage through Zillow Home Loans, just on that feature alone. We get pretty excited about that as well.
Inventory, even before the pandemic, had always been an issue, right? Simply not enough homes to go around supplied, and not enough supply to actually meet that demand. Are you seeing any changes in inventory levels on your platform?
Yeah, we're starting to see inventory pick up. So listings are up over 20% year over year this month. That's great news that people are starting to look to get off the sidelines and sell homes. And then the question will be what happens to prices as a result of that. Do prices stay high like they have, or do you start to see some levers for release for consumers where prices start to come down as inventory comes up?
The National Association of Realtors, NAR for short, did reach a settlement in March, and that does eliminate the 6% commission that sellers would pay to their brokers. How is Zillow's response to that offsetting the hit that it would take?
Yeah, so I think housing is always a category that people talk a lot about. It's exciting. It's, for most people, the biggest asset they own. And there have been some sensational headlines that have come off the top of the proposed settlement. We don't actually expect commission rates to come down that much, despite what the headlines say, because we think buyer agents add value. We've been in the business long enough, and if you put yourself in the perspective of a first-time home buyer, remembering how scary that was, good advice is really needed and independent representation is needed. So we actually think through this evolution, buyer agents will continue to exist. And then when we look at our business, we provide the most consumers, we work with the best real estate agents, and we provide the most technology. So we look at it as an opportunity for us to continue to take share like we have in the past.
So for our viewers, of course, this rate is now going to be negotiable, right? So it could be 6%, could be more or less, I guess, depending on what the demand is actually out there and negotiated. But in terms of Zillow's response, what is it offering now on its platform to basically help people save money if they aren't able to pay that commission up front?
Yeah. What we're trying to do is basically get folks from searching on Zillow and touring virtually through our 3D technology. We then want to get folks into homes to be able to tour homes. So that's one of the big investments that we've made over the past few years. And part and parcel with touring a home, you need to be connected with a great real estate agent. So what we've done is basically taken our real estate agent pool and we've shrunk it by 60% over the last 8 or 9 years, while our revenue has grown 2.5 times. Our job being, hey, let's connect these folks with the best real estate agents, and then from there, make sure that consumers know that their rate is negotiable. We released a touring agreement a couple weeks ago that allows folks to really understand what they're getting themselves into. We love to educate consumers, right? We're on the side of the consumer. And then from there, they come and meet a real estate agent and they can negotiate rates as best they can. And for us, when we think about the real estate agents that we work with, those folks tend to command really good value. We expect them to continue to do so.
The Fed comments earlier today, knowing that the next rate decision will be in June, do they impact your financial forecast as Zillow at all throughout the rest of the year?
Not necessarily. I think as we released our Q1 earnings, we reiterated that we expect to grow double digits year over year revenue, and that accounts for any gyrations that could come. We'll see. As predicting what the Fed is going to do, I think has been hard for any and all people, but we feel good that we can execute through.
You've mentioned technology updates to the website, making it more user-friendly, having more offerings. Artificial intelligence is something that we hear a lot about, of course, on Cheddar and the floor in general. How are these investments paying off for you?
They've been great. We launched this estimate in 2006, and that was rudimentary AI. So AI has been part of Zillow since the founding, and since then we've continued to invest in it as time has gone on. And where you see AI show up in the experience today is our virtual touring is all powered by our proprietary AI technology, and a lot of the personalization you see in our search experience comes from AI investments that we've made. We expect to continue to invest in AI, and we think it provides a really interesting opportunity for us over time.
Are there certain markets where you're seeing growth and others where you're seeing pullback when it comes to demand?
It does depend. Some of the, it tends to follow where things got really hot in COVID are where you're starting to see some pullback, and vice versa. Areas that were a little bit colder in COVID are seeing more demand today. So there's a bit of a reversal that we've seen in housing, and I think you see it across a lot of consumer internet at this point.
And if the Fed does take a slow step-by-step approach to lower rates with inflation being sticky, how would that impact your business?
I think housing's a growth industry over time. So I think we've lived through an elevated rate environment over the last 2.5 years, and we've executed quite well, right? We've outperformed a lot. Our revenue has outperformed the real estate industry now 7 consecutive quarters. So we feel like we're in a pretty good spot to grow through whatever the interest rate environment is. And the way we think about that is we're roughly 65 to 70% of all audience in the country today, and we're a single-digit share of transactions. So our opportunity is to take more of our audience and turn those folks into transactors regardless of the macro environment.
You've shared some of the tools and updates, of course, that Zillow has brought to the platform, buyability being one of them. How else do you see growth moving forward?
I think we see it across the entire business. So our residential segment continues to grow quite nicely regardless of the housing market. Our rentals business is one that we're really excited about. That makes up roughly 20% of the business today, which has grown really nicely over the last 5 or 6 years. And then our mortgage business growing 130% year over year in a tough housing market is another one we're pretty excited about long term.
How closely do you watch the stock price?
Not that closely.
So that's not a factor for you, for instance, in making financial forecasts?
No. I mean, we execute. We think we have a multi-decade opportunity. Of course, we care about what the stock price does because we're investors as employees, and of course, we have a great investor base. But with respect to day-to-day gyrations, I think we try to think in years and 5 years and 10-year type periods when we're making investments.